there, I'm Karla and I'm a certified divorce lending professional, otherwise known as a CDLP. Ideally, I help both parties in a divorce transaction so that they can remain in home ownership, whether it be in their current marital home or a new home purchase. Today, we're going to talk about accessing your home equity when you need to pay out your ex-spouse. All right, let's dive in. I've seen a lot of different scenarios. I've helped a lot of different people through their divorce. While I do all types of residential lending, my team and I carry this special certificate where we specialize with divorcing couples. And what we do is we help to plan your divorce. I want you to really understand what I mean there. We are involved throughout the process so that we can help plan your divorce so that it aligns with your homeownership goals and you're able to qualify for a mortgage moving forward. I've helped well over 1,000 families with their home ownership in the last 5 years, and I mention that because experience really matters when we're dealing in this space. And it is important that you're dealing with somebody that really understands you and your situation and the uniqueness of it. I also want to mention quickly that while we will talk about some legal concepts from time to time, I am not giving legal advice, so please do not misunderstand. Today we're going to talk about accessing your home equity when you need to pay out your ex-spouse. Just a reminder, I'll be posting a new video every Tuesday and Thursday, so make sure that you're checking back with the channel for some new updates and tips while you're going through your divorce. As much as I love sharing all of this advice on the videos, remember I am a licensed mortgage lender and I'm here to help you with all of your lending needs, but especially in the case of divorce. Please call or text this number that's popping up here below. I'm happy to schedule a one-on-one appointment with you so that we can go through your situation. All right, let's dive in. So there are a couple of different ways that you can access the home equity in your home to pay off your ex-spouse. The first and probably the most popular would be to do a home equity line of credit, otherwise known as a HELOC, or you can do a second mortgage. The reality is that they're pretty much the same thing. A home equity line of credit and a second mortgage takes second lien position after your first mortgage. It's very seldom that the home is free and clear, but you could also pull a home equity line of credit if you don't have a mortgage on your home. So typically, like, the big difference between a HELOC and a second mortgage is often a second mortgage does not come with that revolving aspect like a credit card. A second mortgage, typically you take it out and you make payments, kind of like a car loan. So if you're gonna pull out $50,000 on a second mortgage, you will have a set payment. It's usually amortized over 20, 15, maybe only 10 years, depending on the loan product. So often the way that a HELOC works is you'll do a line of credit for, let's say, $50,000, and then let's say that you get a big bonus this year, and so you pay back $20,000 of it. You can always go back and pull back out that $20,000 at any time. Typically, the payments are interest only for 10 years, and also that draw period on the home equity line of credit is usually only a 10-year draw. After that, the loan goes to a fully amortized 20-year payment. The big thing about home equity lines of credit is that they are almost always on adjustable rates, unless they have an initial teaser rate. So like the going rate for a HELOC today is anywhere upwards of 8.5%. So this also depends on your credit. It depends on how high of a loan to value you're taking it. All of those are factors in the rate that you're going to receive on a home equity line of credit. But it is a good option if you have a current first mortgage in place that has a high balance on it. Like, let's say that you have a current first mortgage in place that's $500,000 or $600,000, and you only need to pull out $75,000 to pay off your ex-spouse. That would make sense to have $75,000 at 8.5%, especially if you have that first mortgage of $500,000 or $600,000 down in the low 3% like everybody refinanced into a few years ago. So that would make total sense. Now, where it doesn't make sense is if maybe your first mortgage is only sitting at a balance of, $100,000 or even $200,000, and you have to pay out your ex-spouse $400,000. That would not make sense to take out a HELOC at $400,000 and have this low loan amount on your first mortgage, even though it's at a lower rate. In that case, I would advise you to just do a buyout or do some type of a refi. So let's talk about that. The other option is to do a buyout. A buyout, I actually have a video that goes over exactly buyouts, the difference between buyouts and cash out refinances. So look in my YouTube channel for that video and you can pull that up and see the specifics on it. The benefit of doing a buyout is that you get that interest rate based on rate and term interest rates. The other great thing about doing a buyout is that you can take that all the way up to 95% of your loan to value when you are paying off an ex-spouse. So the only thing to note is that you can only pay off your ex-spouse in a buyout. You cannot take any cash, not even one single penny from that transaction for yourself. So there's some things that we can do in working with your divorce team so that we can maybe award your ex-spouse some debts so that we can allocate that during this buyout and get them paid off for you. So just keep that in mind. That's just a little trick of the trade. So the other option would be to do a cash out refinance. Now the downsides to doing a cash out is that you're going to pay a higher interest rate and or fees, and you can only cash out up to 80% of the value of your home. I guess the good thing in doing a cash out is that you can take out some money for yourself. So let's say that in paying out your ex-spouse, you're only going up to 70% of the loan to value on your home. Now you could take out some more cash for yourself. Maybe you have some of your own credit card debt or something that you need to pay off. So the final option really in accessing the equity in your home is to sell your home. And I know that doesn't sound ideal, but in a lot of situations, that's where things end up. Either because the two parties could not come to an agreement on who was going to keep the home and how much was going to be paid out. But I'll be honest with you guys, it is the best way to know the true value on your home. In this scenario, you would simply sell the home and you would split the proceeds accordingly. That doesn't always mean that you have to split them 50-50. That is determined through the law with your attorneys or your mediators. I've seen it done all different ways where it's split maybe 30-70 or 60-40. Sometimes it is just a 50-50 split. That is not determined by your lender. That is determined by your attorney or your mediator in the process of the divorce. Something that I want you guys to keep in mind is if you choose to do the home equity line of credit or the second mortgage option, and your intent then is to wait until the interest rates drop and combine those two mortgages into one mortgage, I want you to know at that time, when you do that refinance of those two mortgages, that will be considered a cash out refinance at that time. So just expect that you are going to pay a little bit higher in rate and or fees because of that cash out transaction that you will be putting yourself through at that time. So I know that a lot of you that are watching this have been contemplating divorce for a while, and I know you've lost some sleep over it. So I want you to know one of the biggest things that I hear from clients when they call me is, gosh, I wish I would have called you sooner, or I wish I would have called you before my divorce was final. Please don't be that person. I'm available. You know where to reach me. My phone number is popping up right here, so you can call or text and we'll set up a one-on-one appointment with you so that we can go through your unique divorce situation. Just as a reminder, I am a licensed mortgage lender and I'm happy to help you with any of your mortgage needs, but especially in the case of a divorce. This is what I specialize in. This is what I do. On another note, if you don't know where to start with me. I have some incredible resources in this industry and I'm happy to share any of those with you. Anything that will help you put together your divorce team and get you to the end and have you come out whole on the other side. I look forward to sharing with you again really soon.